Volatility is not a risk. It is the source of opportunity. Stock market is designed to transfer the money from the impatient to the patient. That is the beautiful quote by Warren Buffett. How many of you have already heard about it? But how to implement? So in this particular video, I'm going to talk about how to go through the market volatility in case market is going down crazily. So I'm going to talk about how you can come out of those scenarios. I'm going to give you all the important nuggets or all the important pointers to work on, and if you will work on all those pointers, you are going to do really amazingly well. So let's dive in and try to understand what are the important pointers where we should work on if you really want to do good in stock market, and especially when the market crash is happening. The first and foremost thing, this is the topic for today. So I'm going to talk about how can you cope up with the situation, what happens whenever market goes down. So there are some of those very important 10 pointers which we'll be discussing today. The first and foremost thing is stay calm. So very important thing in terms of the way how it happens is whenever our emotion goes high, our IQ, which we call as the intelligence, automatically comes down. So emotion can run very high whenever the stock market is crashing. Now, for you, the very important thing is should not panic. Don't panic whenever the market is crashing, because of this very simple fact that stock market will try to take out some of the people who are impatient. It will try to give you some sort of opportunity to better yourself. It will try to shake so that all the weak-hearted people, all the weak hands should come out of the market. So this is a very natural tendency. It has been happening since last whenever from where market got started, because stock market should be with the people who are strong, right? So stock market will test that particular patience for you. The first and foremost thing is you must be really calm whenever the market is going down. You should be knowing when you want to take the entry and when you want to take your exit. The second and very important point, what from the action point, is a diversification or asset allocation. Now, diversification is key over there, right? Let's talk about some of the very simple scenario when the market was crashing due to this small cap or the mid cap or all those, the small companies were coming down crazily. If you do not have the diversification, that's where you will be panicking. Very important thing, you must have the diversification among the sectors, in fact. And the good thing is, whenever you feel that there is need of diversification, you can go ahead and rebalance your portfolio whenever it is needed. So something like whenever the market was crashing, it was the COVID-19. That is the time when market was going down. But fortunately, all the defensive sectors were going up. Something like all the pharma sectors were going up, all the IT sectors were going up. So basically, each and every crash will have some sort of sectors which will be called defensive sectors. Pick which are the defensive sectors currently into the market which help you. So please feel free to rebalance your portfolio, adapt those different the market crash. Have cash on hand. Maintaining the emergency fund or the cash on hand and cover the unexpected expenses. Don't put all the eggs in the same basket. Now, if basket will crash, all the eggs will be are very much defensive player. So your personality is how much money to put into stock market, because if you do not know how much money to might, how much emergency fund you should keep. If you have all the money in stock market, you will start panicking and you will square off your position. Have cash on hand. Try to overthink. Confusion, lead us to the costly. Keep it simple. No information overloads. Follow what we have been doing to do really well. Keep it simple. Don't try to complicate by getting the information from different media sources. Know your time frame for your position open. During the COVID-19, the market was, this is the corona crash. You were at this when the market was at 12,000. Okay, there was a corona which went down till 8,000. Within 1 to 2 months, your almost 50% of your amount taken out from your account. Your time horizon. You a short-term trader. If you're a short-term trader, you got to exit as early as you can. Let's think that your time horizon is more than 5 years. Okay, so suppose the crash happened during 12,000 was the price when the corona was crashing, and immediately within 2 to 3 months itself, if you can see here, market has again come back to the same place from where it has come down. Even if somebody has invested their money during this fall, okay, or maybe they were on the top of the market, within few months, you are again into the same place where you don't have the profit and loss. So it is something like break-even scenario. Whenever the market is crashing, people think that it will become zero and they will keep on offloading their portfolios. And whenever they will come into the scenario when currently, if you look into that, currently market is at lifetime high. However, there was a small down because of the small cap and mid cap, whatever the scenario come down. Even if you have invested on the top, you are still making almost more than double of your money. You must know what is your time horizon you want to invest for. If your time horizon is more than 5 years, 5 years are very big time, so that market can recover and it can give you the return. In case if your thinking is for long term, you should not panic. Try to have some sort of calmness on you. And in case if you feel that you just want to do the trade, so you got to cut your losses very early, okay, without thinking twice. The next one is called avoid overreacting to the news. News headlines and media, they speculate so many important things where whenever you go and see, how many of you have seen the scenario? Whenever the market crash is there, these days, there is so many different sources are there from where you get the news, and there are so many sources from where you try to accumulate all the important information. Whenever there is some sort of small bit of crash, what happens? All the media and all the news headlines will be on the top of it, keep on showing that market has gone down crazily. But if you see in last 1 month or so, what happened? Market has come, small bit of dip it has taken. So if you see from the top, we were at 22,000. It is still at 22,000 or 21,800. Stay away from all the news. Don't overreact to the news, because if you try to overreact to the news, that's where you might take some sort of costly decision, and due to that, you might not be able to do really good. The next and very important point is stay disciplined. So discipline is very crucial if you really want to be successful in investing and trading. Because see, I think you know that whenever you want to do anything, okay, you must be following some rules. You must have some sort of rules which you want to work on. But while making the rules, it is very easy. Important point is to follow those rules, and that particular mechanism is called discipline. You must be disciplined, whatever the scenario it could be. You just must know where you want to take the entry, where you want to take the exit. If you have clarity of the thoughts, that's where you will become disciplined, and you must see the past result also. So you got to do a lot of back testing. When you do the back testing, the confidence will come, and that's where you are going to do really amazingly well. Please keep on evaluating your short-term and long-term gains, long-term goals or gains, which I can talk about. Market downturn provides us the opportunity to reassess our goals. Okay, what we want to do after 5 years. Now, let me talk about some of those scenarios. So there are many systems which we work on in our society. There is one of the systems is called MIB. We have got MS stocks. We have got BTST. Now, each and every systems and the strategies have got different responsibilities. For me, if I'm here right now in Bangalore, I'm in one of those places. I have got my apartment. So this is the apartment which I have taken from the loan. So I know that this is the strategy which is going to repay my loan. So you must have the understanding of what strategy you are using it, and you must reassess your situation or the goals, because you never know, whatever the strategy you are using it might not be able to solve the purpose what you are doing it. So that is the time the evaluation of the previous data is so much important, so that you should know what system is going to give me the data in which sort of scenarios or what sort of time. Okay, so these are the 9 important learnings which I have got out of those 2 bigger crash which I have seen, and I have come across all of those. So let me recap all of those. The first thing is you must be calm, and second one is you must diversify your capital. Please try to rebalance your portfolio whenever you feel that there is a need. So whenever you feel that I have got less exposure to the defensive sector, please go and do it. Have some cash on hand so that you will be confident on the market. Keep it simple. You should know your time horizon. If your time horizon is more than 5 years, you should not be worrying about what is happening. You just need to follow your rule. You must know where you should enter. So you got to come up with the rule. Please don't overreact to the news. That's where most of the people go wrong. Stay disciplined. And the next one is keep on evaluating your goals. That means if you are using some strategy, what is the output you are looking for from that strategy? In case if you're not getting the output, you got to evaluate with different sort of, the cycle of the market. Okay. Now, what next? What next is very simple, where I talk about those 9 important pointers. You got to implement. People usually say that implementation is more powerful than the idea. No matter how much bright idea, unless you don't implement it, is of no use. So I would highly recommend you to comment on the comment section. What are the important pointers which you got out from this small video clip, so that you should do really good whenever there is market crash. So again, sign off from this amazing video. And I'll highly recommend you to understand this very important point. Volatility in stock market is not a risk. It is a source of opportunity. A stock market is designed to transfer your money from the impatient people to the patient people. Now it is up to you to decide where you want to be patient, you want to lose money, or you want to be patient. So we should try to move your psychology from the impatient people to the patient people, so that you can get result. By the way, if you're not part of our community, I'm the owner of one of the community called McMartin Freedom Hub. So if you would like to join that community, where we keep on talking about this sort of small scenario, how to come out of the situation whenever the market crashes, click on the link below, and I look forward to meeting you inside my community. Thank you so much. Take care. Bye-bye. God bless you.